Namaste. Hello, everyone. 20th November 2022. This week, the PE ratios has gone up to 21.79 from 21.66. That's a 10-day gap. And market capitalization to GDP ratio is continuously going up from 103, it is to 104. Anything above 100 for Indian market, we used to think that it is expensive. But as the country start developing or it's becoming a developed nation, just like US, even at the level of 125 or 150 is also okay, which we will see in the next page. The relative strength index is 55.93. It is also just going up because the markets are going up. 70 is the level when it is overbought, and that's very, very expensive. On the other side, FIIs continue to sell. This week, we were positive to the extent of 2 lakh contracts. But again, because of the volatility, it has again become negative. FIIs at the end of this week is again 1 lakh contracts negative. Nifty closes 18,307. We have not reached a point wherein I will say that the market is negative and you should sell everything, nothing like that. Yes, the market is expensive. One should do a little bit of profit booking. One should look for debt funds because the debt funds are also generating, like the normal overnight and the short term funds are also generating 6% plus return. And that's very, very good. So one should do asset allocation at this point of time when they have got a very good gain. And this asset allocation and the profit booking from equity should continue in phased manner. Coming to the RVCC parameters, the market capitalization to GDP ratio 104 for India and 154 for USA, which was 145 last week. So, and the second other parameter, which is the exponential moving average, it is still above the 13-day moving average. Everything is positive. There is nothing to worry. RSI is also okay. There is nothing to worry. And but gradual allocation to debt is recommended from this point also. If we see that the PSU banks have been outperforming 35% returns in last 3 months, and metals also 10% in positive in last 3 months. On the other side, media is negative by 5% and also IT. If we come from the VC dashboard, we have this week we have index funds. Index funds, I think, is highly recommended at this point of time if you are taking a short-term call, because in these funds there is no entry, no exit, and there is a low expense ratio, and it is advisable if you wish to invest into Nifty next 50 sort of funds. And on the hybrid category, like balance advantage fund or asset allocated funds, things like that also looks very, very good because from this point, this is a hybrid and a relatively very, very conservative funds. Investing in this funds for next 1 year will be a good way to take it forward. With this, we come to an end of the weekly newsletter. Thank you very much for continuously watching these newsletters. I'm sure they are helping you in some or other way. Look forward to see you next week. Thank you. Bye-bye. Have a blessed week.